These Chinese car brands are just flexing on us now. I know you guys are going to make fun of the name again, but this is the Yangwang U9. And
Yang
not
Wang.
only is it the fastest production electric car ever, but it can also do bunny hops and drive on just 3 wheels. So this is
Cool.
BYD's first fully electric supercar. It packs 1,287 horsepower and
Wow.
1,200 pound-feet of torque. And it practically teleports 0 to 62 miles per hour in just 2.3 seconds.
That'll
So it's
work.
faster than an SF90, a Bugatti Chiron, a Turbo S, but believe it or not, none of that is the most impressive part. The U9 features BYD's Disys X full active body control system. This gives the car the ability to jump, shake, dance, and
Wow.
even balance while it's driving on
Let's
just
go.
3 wheels. And if that doesn't impress you enough, this car is way cheaper than the ones I listed before at just 233,000 US dollars. And that body
Beats a
control
Bugatti.
system reportedly makes it unreal to drive on the track or just on normal roads. Trust me, I don't expect the US to be getting these cars anytime soon. But I do hope it lights a fire under the US and European automakers and encourages them to get on their game. I mean, there's no reason why BYD could drop this U9 before Tesla drops the Roadster.
So pretty powerful stuff. I'm going to be breaking down today Tesla's earnings, the jump that I had predicted. I'm going to go back into the charts and give you new technical alpha for Tesla. I'm going to tell you what we need to see next to know how this is going to play out. Big move. The market's going to digest it. I'm going to explain why it moved up like that. But I wanted to start with this video today of Tesla's competition because I wanted to remind you or even ask the question, is Tesla out of the bear woods yet? Tesla has ignited an EV war that spans the globe, and based on that video, things are absolutely heating up. Yes, I want my car to be able to bounce. Yes, I want to get to 0 to 60 in 2 seconds. And the fact is, if you're a Bugatti owner, you've got to ask yourself, why can't my car bounce? Did I overpay for my Bugatti based on the technology that's available? And so, yes, we did see a big pump after being absolutely annihilated through months and months and months of a bear attack. And I've been kind of telling you guys that no matter what, we were getting down to 140. 140 was the line in the sand. And I told you that it had to hold or this would be a $112 stock. It did hold. I also told you that we were watching for a reversal candle. We needed to see some buying action at this level to know whether or not the bottom had been officially cemented, sealed, put into the books, and that now we could look for a much bigger move up. Now, we got that candle. Now, I'm going to tell you guys, like I said, I know what we need to see next in the charts to confirm that we're going higher from here. And I know where the big resistance wall is ahead. This isn't hard for me. I'm telling you, I see it clearly in the charts. I'm going to show it to you guys today, and then we'll all know. If you've been following along, I've been calling Tesla's moves from stage to stage, from support to resistance, over and over again for weeks on end. I'm going to do it again today. This is the Stocks with Josh show. I appreciate you guys joining me today. Later today, I'm going to be doing a live on this page with the Stock Squad, hosting Keenan Grace, Stock Up with Larry Jones, and Stock Mo. And we're going to be able to do a Meta reaction. Meta's earnings are after market close today. We're going to be reacting to that. We're going to be probably talking a little bit more about Tesla and the fact that we've got Google's earnings tomorrow. We're going to be giving some thoughts on Bitcoin and the altcoins because that's also following the prediction that I gave on Bitcoin. And we're watching carefully for this potential rejection on Bitcoin because it will bring the alts down. And I want you guys to be prepared. Now, don't get fearful. Don't sell your bags, but just watch the lines that I give you. And it's going to be the same with Tesla today. I'm going to kick things off initially with going into some other analyst views of how earnings went. Let me start off with that. We're going to go into that article right now. Tesla's Musk shows commitment to company's AI efforts in analyst call, Morgan Stanley says. So I'm just going to read a little bit of this, but right off the bat, what Morgan Stanley is saying is that one of the reasons why the stock jumped is that Tesla showed that he is committed to the AI efforts of Tesla. But I'm going to break that down for you guys a little bit more. Two big things out of this article. The first quarter conference call did not feed into the widely held bear view. All right, watch us carefully here now, that Elon Musk could be shifting the AI emphasis away from Tesla towards other non-Tesla entities under his voting control. Morgan Stanley said, in fact, quite a good deal of the investor letter and conference call was devoted to the significant ramp up of computational horsepower. Now, this article goes on to talk about the fact that he needs to come up with some new models to basically grow car sales, and that he also committed to doing that. But the big emphasis of this letter is about this computational horsepower. So what is this computational horsepower that they're talking about, and why was it guiding the bearish view from an investor perspective on Tesla? Well, here's what exactly was going on. The only way that Tesla's price deserves to be at the lofty level at which it is today is if they're not just a car company. You've heard this said many times. Elon has said, we're not just a car company, we're a technology company. Now, these guys back in 2022 built the Dojo supercomputer, and it was going to focus on helping Tesla become that tech company by enabling it to have full autonomous driving. The big fear. And the reason why people were beginning to doubt Tesla as a tech company and begin to push them into the category of just a car company in a bad macro environment, because we know car companies are in a bad macro environment, was because people believed that the computation power of that Dojo supercomputer was going to be put onto other projects. And he came out and said, no, guys, don't get too bearish on me. We are a tech company, and we're going to devote the Dojo to learning autonomous driving, and we're absolutely pushing forward in that arena, as well as the fact we're going to create some more models that can sell and push car sales, give the market some variety. We know they want it. And, you know, like I started off with that intro video, BYD is giving massive leaps as a car company. And so Elon's got to do more, and he came out and assured the market that he was doing more. Another factor, and I've mentioned it before, is that Elon's got to get paid. Now, he's still trying to work out his package. The perfect scenario would be to see some advancement on the forefront in the next earnings regarding autonomous driving, and for Elon to get his pay worked out. A lot more confidence would come back into Tesla, because a lot of people at that point would believe that Elon is in the ideal position to push them forward as a tech company. But that's the fundamental story. We want to turn and look at the charts and see what story is being told there, because it's just as important. And to be honest with you, the market often leads with the price action, and then we find out later why it did that. And it's kind of what happened here. So we're going to see, what is the price action telling us moving forward? What do we need to see to believe that Tesla is officially out of the woods? Before I take you into that, let me take a very quick station break. I want to talk to you guys about the MOOMOO investment app. If you need better trade tools on the go on a mobile application, personally, I think that MOOMOO offers one of the best. They also have a ton of data that's hidden, like gems, on the app. A lot of things that people are paying for elsewhere are free data points, free news on the MOOMOO app. It's outstanding, and I'm going to go into a series over the next couple weeks to show you some of those better tools in the MOOMOO app. So if you need to open up a new exchange, there's a link in the top pinned comment. Their current promotional offer is they're giving away 10 shares of the Magnificent 8. So again, there'll be a link in the top pinned comment. It's available in the US, Australia, and Canada. Click on that and check out the offer that's available for you. All right, we're going to get into the technicals. I have charted the way on Tesla, and we're going to do it again today. Let's go into the charts. Okay, guys, we're starting off in the daily time frame. I'm going to keep things fast and simple. We had this established mother of all trend lines that caused a meet and greet for the price action back at $140. And I had said to you guys that if we held that line through earnings, that we would make our way back to 160. Boy, did we, shooting past 160, all the way up to around 165, which is resistance for Tesla right now. And now we are hovering around 160 today. And let me just be clear, guys, I don't want you to have any confusion about what I'm laying down today. 160 is the line in the sand. So if it can't hold 160 over the next couple days, then expect it to begin to retrace. Where would it retrace to? It could retrace all the way back to $140. So I'm going to give you guys the pattern that we're going to be watching for. But the first thing I want you guys to understand is that the 160 price, it has to open and close above on the daily time frame for us to believe that it's going any higher. And you might ask, okay, Josh, where could it go? It can go as high as around 176. That's going to act as a pretty strong resistance for quite a while on Tesla. Now, there are people out there who they don't hear what I'm saying correctly. They think that I'm saying that Tesla is not bullish. They think I'm saying Tesla can only hit 176. No, we're talking about time frame. These two lines that I've drawn, these white lines, we know that the bottom line that's ascending is, I'm calling it the historic mother of all support lines. And the top line, I see this as the resistance line. Okay, guys, I think that we're going to have to come and fight this resistance line. Once it got rejected beneath that resistance line, that's what led to this massive sell-off. So we know that this line matters and it has to be respected. If the price respects it, then why don't you respect it? Okay, we will respect it. So 176 is going to act for a while as a tough place for Tesla to cross. It's not even going to be on the table unless we can close above 160. I've drawn 150 on the chart, but you can relatively ignore it because truthfully, beneath 160, the only real support for now is 140. 140 did hold up, and so that's really good. But if 160 doesn't, we're going to be back in this range right in here, undoubtedly. But here's what's important, and here's the technical alpha for today. I want to talk about what we need to see the chart do so that we know that it's reversed from a downward trend back to an upward trend. And okay, let's get into it. I've talked about this so often, guys, and it's a great tool to learn because it just helps keep things simple. When you have descending parallel channels, they traditionally break to the upside. And so when Tesla went on its big run, it had a number of descending channels, all of which broke to the upside. And there's a lot of them in here, right? All of these broke to the upside, right? But then eventually we got to the place where we began to have ascending channels. It's right around here we begin to see these series of ascending channels that repeatedly broke to the downside, right? We had this massive move down that was followed up by a V-shaped recovery. And yet again, we did get some more ascending channels, which were bearish, okay? These were ascending. They broke to the downside. And we got another one here. It broke to the downside. And then we had this massive move up, break of structure, right across here, break of structure, moves right past that previous structure. And we had that all-time high. But since then, I pointed out to you guys that we had all of these ascending channels which continued to break to the downside. You can see them all throughout here. The channel was basically moving up. It broke to the downside. The channel was moving up. It broke to the downside. The channel was moving up. It broke to the downside. So when you have a change of character, here's what needs to happen. We had this massive move up, which is characteristic of a change of character. Like previously, you want to see almost a V-shaped recovery. Now, when that V-shaped recovery is in force, you want to see your channels begin to be descending channels, which will then continue to break to the upside. You'll see a series of them. We could end up getting one right here, and again, it would break to the upside, breaking over that descending line of resistance. And so, right now, we have the beginnings of a V-shaped move, right? Now, if we begin to move back, this is another way of putting it, we have to see a series of higher lows. We cannot break beneath 140 again. If we go back beneath 140 at all, I would tell you guys, again, count it a $112 stock. It means that the trend is going to be bearish for a much longer period of time. Personally, I think this V-shaped recovery indicates that the majority of the down move has been priced in, and we're going to begin to give Tesla the benefit of the doubt. In this time frame, we are largely going to be making moves up, descending slightly, move up, descending slightly, move up until we come up against this line. The line is largely going to be defeated at around $176. That area that I've got my crosshairs on now is right around June 24th. I personally believe that Tesla should break out of this descending channel around June, mid-June, and it's going to be when it closes above 176. So guys, that is your Tesla alpha We can't make a new low. We really don't want to even come back to 140, but that is possible if we don't stay above 160. But I think that what we need to be watching for is that perfectly created descending channel that breaks to the upside, but before it breaks, it needs to make a new higher low. We can't be going back to 140 right now. If we go back to 140 and we close beneath 140, then give it up. There's much bigger problems for Tesla ahead. I don't see that right now. I think that the bearishness, I told you guys the bearishness was priced in to these earnings and that the market was just waiting for an opportunity to pop off the lows. I also reminded you guys in a recent video that Wall Street buys fear and they sell greed. And so later on, when we're back up to 220 or 240, which has been my prediction, you're going to have a huge problem because at that point, a lot of people are going to be saying, well, it's time for this to go back to 300. And I'm going to be watching for that. But at the moment, if we take a big historic look back, Tesla stock overall has been getting punished because they've got a lot of challenges. I led with the video of BYD killing it on the technology front because I wanted to make it clear that Tesla's got real challenges, real competition, real threats. Wall Street is really doubting whether or not Elon is going to take this company to the next level, outside the scope of being a car company, back to being the best car tech company or the very best tech company in the world. That's what Wall Street wants to see, and they want to see them do it while growing the profit margins, protecting the profit margins, and being highly focused on the big picture view. And at the moment, Elon has bought himself another quarter. Wall Street said, okay, we're going to enter back in at these cheap prices. 140 seems pretty good to us. And we're going to watch you, and we want to see you begin to perform and produce and beat your competition. That's the big picture story. Guys, we need to go from ascending channels that repeatedly break to the downside. We got our V-shaped recovery, which I told you we would likely get. We now need to see a pattern of descending channels making higher lows, breaking to the upside. This channel is about making predictions. It's about reading charts. And it's about teaching you guys what to visually watch for simply through the experience of my own personal trading and my own years of charting. I'm trying to give it to you. Now, if I did a good job, if I showed you something, if I opened up your view to understand something a little bit better about Tesla, and you're new to the page, I hope that you hit that subscribe button and continue to join us because we're not just doing it for Tesla. We're doing it for a lot of companies, and we're having a great time on this show. Tonight, I'm going to go live again. We're going to talk about Meta. I talked about Meta yesterday. Worth watching that video because it's very clear in the prediction that it gives. And I'll give it to you guys, even though the video is going long. I think we can climb back up on Meta. And I expect that we will climb back up on Meta. But I would tell you that in the next 3 months or so, Meta's going to hit a top that is going to be a top that it's going to get reject from. I gave that price in yesterday's video. And I think we're going to fall at least $100 on Meta. So up for now, but I will give you guys that signal the day that I see that up move for Meta has been broken. It's not been broken yet. Matter of fact, if you go into the Meta chart, what do we have? We've got descending channels that look like they want to break really soon to the upside, which means that earnings could be a pretty good pop. And I'll tell you this, let's say the earnings did give us some trouble. I'm going to tell you that I would see a flash down on some initial numbers with once begins to give guidance, talking about AI, then you're just going to see it run for the next couple of days. That's another hard prediction from the Stocks with Josh show. Guys, I hope that I earned those likes. When you give likes, when you take the time to give a like, it actually pushes the video out to more viewers, enabling me to grow and share more of my content with people. And I hope to see you guys again soon. Peace and blessings. We'll see you tonight here shortly and with reactions to Meta with the Stock Squad. Talk to you later. Bye-bye.